Welcome to Real Talk with Real Estate Pros, where we bring you exclusive interviews with the real estate experts. We'll delve deep into their journey to success and learn how to go the extra mile to serve their clients' wants and needs. Let's dive in. Here's your host, John Money McKinley.
Morning, everyone. Welcome to another edition of Real Talk with Real Estate Pros. Got a really special episode here today. I was actually able to, a lot of people may not know this, but underwriters that underwrite your home loans, we keep them in dungeons chained to desks. But I was actually able to get one out, and this is a very difficult thing to do in my industry. But we've got a great show today, and I'd like to start out with saying I appreciate everybody being here. And if y'all would really do me a favor, we're really trying to grow this show and really trying to get the information out there to people on really what's the truth that's happening in the world of real estate today, because there's a whole lot of stuff going on in the world of real estate that the television and the newscasters have no clue about, and that's why I'm bringing you Real Talk with Real Estate Pros. I'm bringing you experts from the world of lending, such as myself, also bringing you experts in the world of the real estate side, such as real estate professionals, real estate agents, and on today's show, I've got an underwriter who will be undercover, but I want to make sure that everybody would help me out, and please like, subscribe to the channel. Also, too, if you know anybody that you think would be a great guest on the show, please feel free to have them shoot me a text and let me know who they are, and I'd love to chat with them about being on the show. But with that said, I'd like to go ahead today and introduce our guest. Like I said, she is hidden behind cover here, and we're going to give her a name of Heather today. And we've also, too, Heather, I just want to let you know, I've got the transmographer voice disguise that's on, so people won't even be able to tell that your voice, so you're safe to go.
Okay.
But with that said, Heather, I want to thank you very much for coming on the show today and being here, and we're going to really dive deep into the top 7 mistakes to avoid for a smooth home loan process, and I figured there would be nobody better than an underwriter expert such as yourself.
Thank you.
Well, if you would just kind of give, please don't give the name of any places that you work, because we don't want to take you out from undercover, but just kind of give my audience an idea about a little bit about who you are and how long you've been in this wonderful world of mortgages and home underwriting.
Okay. I've been in the mortgage industry actually 32 years. I've been an underwriter for about 26 of those 32 years. I have all my delegations, FHA, VA, USDA, and I also underwrite conventional.
Wow. So wait a minute. You've been in the industry for 32 years. So what, you were about 7, 8 when you started, right?
Pretty much, yeah.
Okay. Just like myself. I was but a child when I started.
Exactly. I was 12.
I really appreciate you being here. And I just want to let everybody know this is going to be a multiple part series. We're going to be going over the top 7 mistakes to avoid. And we're going to do each show with 2 of the 7. So today we're going to go into 2 of the 7. And with that said, I want to go ahead and start moving into that as well here. And I'll let you take the show, Heather, and kind of give us an idea of what number 7 would be for today as far as mistakes.
Okay. I believe we decided to do the avoiding opening credit.
Okay, perfect. So number 7, applying for credit during the home buying process. Please, I know you have to have some good horror stories about what's happened on loans you were working on.
Yes, I've had borrowers go and purchase refrigerators, washer and dryers, whatever the case may be that they're looking to purchase for their new home. We always like to tell people to please window shop. Feel free to window shop, but don't open any new lines of credit. And opening any new lines of credit also includes don't increase your current credit. So if you have a Home Depot card, don't go and charge that new washer and dryer on any existing cards either, because in the mortgage industry, we pull refreshes and it will tell us if that balance has gone up and if that payment has gone up. And unfortunately, we've had situations where borrowers have basically disqualified themselves because with the higher payment, they no longer are within ratio and we can't get the approval. We've had some lucky enough to be able to get a gift that were able to either pay off what they had purchased or put more money down to bring the ratio down. But I would say about 75% of the time that is not the case, and we end up not being able to close the loan for those borrowers simply because they couldn't wait till after closing to purchase that refrigerator or whatever it was they were looking for.
Yeah, that's a huge one, and I always talk with my clients during the process and before we start the process. It's like, look, if you apply for credit during this process, it's going to come up, and you can attest to this as well. We live in a time now where we pretty much know everything the borrower's doing in the world of finances, credit, and real estate during the process.
Yes, we have a report that we pull that basically tells us everything. We also have the ability to pull their bank accounts directly without them providing the bank statements and stuff like that. Once they give us authorization to do those things, we can and do those things to ensure that we have sellable loans and are, making the right decision for that borrower.
And that's something very important too, is as people need to understand, is a lot of what goes on in the world of mortgages. I know people are like, well, why can't it just stay with one bank? Why can't it just be like it used to be? Which is all fine, but you have to remember is a lot of the reason that we do have the lower interest rates, which I know they're not as low as they used to be. They have gone up a little bit over the past couple years, but it's because of the ability of a mortgage company to sell those loans on the secondary market and not have any change on your mortgage itself, except for who you make your payments to. But with all of that said, the people on the secondary market, plus Fannie and Freddie, which are the main ones that loans are sold to, they want to make sure that we, as the lender, when we put the file together, we did our due diligence and made sure that no new credit was applied for, no other real estate was being bought during the time. Because I'm sure you've seen that during the process where next thing you know, it turns out somebody bought a house at the same time they were working with another lender at the same time.
Yes, and when those inquiries come up, we do ask them to fill out an LOE telling us that they don't have any other, loans, mortgages, or anything like that in process while we are doing their loan. Whatever they do after closing, of course, we have no control over. But up until closing, we're pulling those credit refreshes and making sure that there aren't any new inquiries or any new debt out there that would impact our ability to close that loan.
Yeah, and everybody needs to understand too, there is a lot of documentation during the home buying process that you do sign, and if any of it's fraudulent, that can be a felony offense if you basically lied on any of the documentation.
Yes, the lender can call the note due in full.
Yeah. And the federal government can and sometimes does come in and loves to set examples for people.
Always.
We must set the examples.
Exactly.
Oh, perfect. Well, let's go ahead and move to our next one here, Heather. Number 6. What is number 6 on things to out of the 7 mistakes to avoid to have a smooth loan process?
Co-signing for someone.
Ah, yes, the beloved co-signing for the family member usually, such as in the picture we have here representing the happy mother and father for their early 20-something-year-old child who they probably co-signed for.
right? And then he didn't make the payment. And so that impacted their credit, which I believe you and I, John, had a loan like that last year, right? Where the borrower two on the loan had co-signed for her mom years ago and just kind of forgot about that loan out there. And whenever we pulled credit, found out that mom had not been making the payment on time, and we had to rework the whole file and find a new co-borrower for him so they could close and move into their home.
Well, actually, that was a little deeper than that because she co-signed for the mom, but the problem that came up was it was for a piece of property that the mom bought and moved a manufactured home, aka mobile home, onto the property, and the thing that the daughter co-signed for was not the manufactured home, it was for the note on the land. But the
Oh,
problem
right.
is the land was being sold owner financed. However, because the daughter co-signed for the note attached to the land, she was attached to the real property. So as we dig
Yeah.
deeper and do our due diligence, which we must do, because the borrower, and I can't be mad at the borrower for this, and you and I talked about that. She just thought she was helping her mom out.
Right. And I believe she'd even forgotten that she'd even done that until we brought it to her attention. But luckily, we were able to find another co-signer and get that loan closed. I recently had another loan where the wife co-signed for a new vehicle for her son in the middle of loan app. And that ended up throwing them out of qualification because we had to qualify them with that payment. There was no payment history from the son making the payment on time or not. It was a brand new debt. And so with that new debt, they did not qualify.
Oh, and I can't stress to everybody enough that co-signing, it's not something you really want to get involved in with people because it usually causes more harm than good in most cases. The only time you really want to co-sign with somebody is if it's your spouse and you're buying a home together. Then that's different. It's you two buying the home, you're living in the home. That's a different scenario. But when you co-sign for your children or you co-sign for another family member, it can burn you more times than not.
Right, because at the end of the day, a cosigner is still ultimately responsible for that debt if the primary borrower doesn't make the payments.
Exactly. And just like that example of the one you and I were working on, the daughter had no idea. She's like, I was just helping my mom out. And the sad part was the mom had missed the payments every month. The mom never paid the payments on time
That's right. She was making the mobile home payment on time,
because
but
that
she
was on the
wasn't
mom's
paying,
credit, not the land on the mom's credit.
right, but she was not paying the land on time. Since inception of the loan, she had never made one payment on time.
And then unfortunately, even though it's because the daughter had co-signed for it, she still held responsible that, hey, it wasn't made on time. Therefore, that's a big hickey against you because that's a real property loan that now we have a history of multiple years of not paying on time,
Right, that's correct.
which knocked the loan completely out of the eligibility to be able to be put together. And yeah, but luckily we were able to do a lot of our magic in the background, which is another reason we have to hide Heather's face. So that way the people don't know who one of the secret people behind the scenes is that can help us put these things together and make things happen.
Exactly.
But no, I really appreciate you being on here today, Heather, and I look forward to digging deeper into this. And I really appreciate my audience out there. And like I said, I want to keep bringing you guys these shows that give you some real solid information that you can use. Because let's be honest, These interest rates have gone up. There's a lot that is in the process of changing in the world of real estate. You've got to have someplace you can go to get the truth about what's going on if you're thinking about buying or selling real estate or financing a home. There's so much out there. I mean, Heather, we've been in this business over 30 years. There is a lot of stuff that's changed.
Yes, there is a lot, and hopefully we're going to cover all those things in our next couple of episodes we have scheduled.
Exactly. So, and that's why I'm glad to be here to give everybody a place to have where you can come and get answers on what's going on. And please, once again, if anybody has any questions, that's my direct text number up there. Please feel free to shoot me a text. If you want to find out any information or you have questions about anything you're doing in the world of real estate, don't hesitate to reach out to me. I'd love to chat with you and give you a free consultation on that. But with that said, I'm going to get out of here. I'm going to let Heather get back to her desk and chain and dungeon.
Thanks for having me, John.
No, thank you so much, Heather. We appreciate you. And once again, everybody, if you would do me a favor, please like, subscribe, and share. I'd really appreciate it. Y'all have a great one.